Okay, let's go ahead and kick it off. So we are live. I want to say welcome to everyone who has joined. Thank you for joining us. Today's going to be our ninth session of Prep Your Firm, our Prep Your Firm webinar series. If this is your first time tuning in, this is a series that's all about helping you get a stronger start to 2026, which is right around the corner. We highlight the tools, topics, insights you need to plan ahead so that way you don't have to stumble into the new year unprepared. I'm Abe. I'm Acre's content marketing manager, and I'm really excited to be hosting this session. Before we dive in, do you want to do a quick tech check and just make sure you can hear me clearly? If you can, drop a note in chat. Let us know you can hear us. Let us know where you're joining from too, if you'd like. It's always really fun to see the mix of locations and the different firms who are represented in these sessions. Um, just a couple of quick housekeeping items before we get started. Today's session is being recorded, so we'll be posting it on YouTube afterwards. We've heard from past attendees that they found these sessions to be really valuable and they want to share them with other people, with their teams. So we want to make that as easy for everyone to do. Also, using that same chat, feel free to drop questions in throughout the session. Today's episode is going to be more of a fireside chat, so it'll be very conversational. We will try to surface questions as they come in. So by all means, just put those questions in the chat and we will try to get to them. Um, and yeah, with that out of the way, I'm thrilled to introduce today's presenters. David Safir, founder and CEO of Cash is Clear and a leading expert on cash flow management, and Robin Scobie, business and accountability coach. Both will be speaking today about how to talk to your clients about cash flow issues. And David and Robin will show you how to spot early warning signs, start these conversations with confidence, and move from a reactive position to more compliance-focused work. So you'll walk away with practical ways to ask better questions, uncover challenges, and strengthen client relationships. So without further ado, David, Robin, the stage is yours. Thank you so much.
Thank you, Abe. I appreciate it. We appreciate the introduction. Robin, should I explain our relationship a little bit?
I think so. I think that'd be a nice way to
Okay,
start.
good. So everyone knows Robin has been a member of the Cash is Clear advisory program for about the last year and a little bit. So that's something that I teach, and I help financial professionals go from compliance work into deeper advisory work. Everybody comes in with a little, some level of understanding of how to do advisory, and we go that much deeper. And so Robin's a successful graduate of our advisory master program. And so we decided to come in today and have a conversation. And we're going to talk about this time of year that everybody is sitting down with their clients to discuss whether it's taxes or it's end of the year accounting. But this is oftentimes when people have annual appointments. Robin, what would you like to add before we go on to the dialogue? We have a sort of set list of topics we want to talk about with each other and
You
with you.
know, for somebody that had started from the accounting practice and leading up to this, I always thought this was a very daunting and scary part of the professional world that I never understood. And David, the way you're going to explain it today in the next half hour, 45 minutes, really kind of breaks it down.
Well, good. So let me first start with talking about there's a 5-step process I've put together. And this is going to be important to get some context because it's fairly simple to say what the steps are. Number one is the thing everybody thinks about when they're doing. Now, I focus on cash flow management and profitability, but what we'll talk about today goes for any aspect of advisory work. But when you do cash flow management, most people think about cash flow modeling. So that's where it starts, is modeling, and then managing cash flow, which is moving money in faster, pushing it out slower, but doing with and working with the assets you've got, not going anything past that. Then you can move to maximizing cash flow, maximizing profitability. Once you're under control and you're able to manage it. So that's what people think about. But here are the two keys to truly becoming an advisor. Number one is mindset. Now, mindset's overarching. And for the purposes of this conversation, I'm going to put the last one, which is usually sooner. It's mentoring. And what is mentoring? Mentoring is helping the people that you work with understand what you're talking about. For most people, including possibly yourselves, we are going to be talking about some things today that you've never heard of. It's a different type of mindset. So that's the overall, that it's modeling, managing, mentoring, maximizing mindset are the steps. And we're going to focus in on mentoring and mindset today because we're going to be mentoring you on how to talk to your clients. And that's a different type of mindset than handing them reports. Robin, any thoughts on that?
You know, tax season's coming up really quick upon us, and it's the perfect time for us as the professionals and the trusted advisors to really take that shift in our mindset and figuring out how. How are we going to have these conversations? How do we want to grow and add to our firms and our value to our customers?
Robin, do you mind talking for a minute about how these two concepts, mentoring and mindset, the shift that you've had, how it's impacted your practice over the last year?
Absolutely. For a long time, I really focused my work on modeling and managing. It was building the cash flow systems, tightening up the process, helping the clients understand their numbers. But after taking this course and really diving in, the real change happens when we combine the structure and the mentoring and the mindset. When the business owners are able to start and see their numbers differently, not just a source of stress, not a tool for freedom, but their entire approach just completely shifts. And that is something we are able to give as the accounting professionals or the bookkeepers or however, whatever professional part you're in on that, um, you're able to help them mentor and understand and guide them and change their mindsets about how money comes in and money goes out and where they're making their money.
Um, I just brings to mind you have a client who has to do with estate liquidation,
Yes.
and that it took you. We talked about him for months and months, and all of a sudden you used one of the things to help shift mindset, and he went, if I remember correctly, from stubborn. Is that the right word?
Always done it in his own way. It was successful and he had been very successful. So yeah, he was stubborn and kind of set in his own
Stuck,
ways.
and then you finally presented in a way, and what happened?
It was a game changer. And it was understanding where some of his money was going without it being true cash. It was and like shifting of how his business is operating and thinking about potential of money being wasted or potential of money not being made. It was just a huge change in how he thought his business, but it still kept his morals and his values to his company.
So that's what we're talking about today, is helping business owners, and it goes beyond accounting. So what I'd like to do now is shift over to the reasons people should care about this. And there's two reasons. Number one is client care and advocacy. When my main motivation for doing what I do is because I care about people, and I've seen lives ruined by businesses going out of business that are perfectly good businesses. What do I mean by that? They do run a profit. They do have assets. They are fairly well run, with the exception of one thing, and that is cash flow. And it's killed way too many businesses. So if you care about your client's success, this is one of the reasons you should be talking to them about what you see. Robin, you want to talk about the second reason?
I really go into also helping your clients, but 20% of businesses fail every year. When a client goes out of business, that affects our practice, our firm, our business as well. because we're out there having to replace them. We're advertising, we're having to re-onboard our clients. It's that self-preservation of how do I keep my firm going? If I didn't have to go and find new clients every year, I didn't lose that because of businesses going out of business or companies going out of business. How does that affect my business? The cost of turnaround is so high.
I agree, and I don't have the same type of a business. I'm not an accountant. I don't do bookkeeping, but for sake of just keeping people involved, you guys can always ask questions. But why don't you throw into the chat if you've seen that where companies are failing, and if you've had clients just got a business that were profitable and that you thought should succeed and just didn't. But we're not going to stop. We'll keep going and let's see what your answers are. So when I am working with a brand new client, I see a lot of things automatically when I'm looking at financial reports. And so we thought about what are some of the things that you can be looking for as whether you're doing accounting, which you're looking at financials, or you're actually doing the financial work on the reporting. Here are some things that you could be looking for that are indicators that the client either currently or may in the future, in the near future, end up with cash flow issues. So my first thing is, and I see more clients in this area than any other, they're growing really quickly. This whole concept that sales solves all problems, absolutely, positively not when it comes to cash flow. Fast growth breeds cash flow challenges. I won't go into why right now, but they can get into faster and easier to get into trouble growing quickly than declining. Doesn't mean they are in trouble, but it's a huge red flag. So just looking at year over year growth, anything for me exceeding 20% for sure, but even 10% growth can cause some growing pains.
And then we flip it to the other side where the significant revenue decrease. And we see it as a bookkeeper, as an accountant. I used to see it all the time. I could see it because I'm looking at the profit and losses. I'm comparing everything. But when I saw those significant revenue decreases, it was hard. It was either growth or decline in sales, but it's a huge red warning signs. We're already comparing the year to date and the year to year during tax preparation. We see it, but then what? But we'll get into that later. These are just some of the warning signs.
So when I start working with a new company, I always say, tell me about who's doing your bookkeeping, your accounting, and big red flag is a relative or a friend who's uncredentialed. Now, there's exceptions. I worked with an organization that the son was doing it, and he had a business background, but it's sort of interesting. It was a business background from school, not from real life, and so he had a lot to learn still. Um, put in there. Do me a favor. So I'm going to put it in first. I'll put in his son who I've seen and friends. Tell us who you've seen doing bookkeeping that you've gone afterwards. They really need a new bookkeeper.
Yeah. And the next one that I always see is a huge red flag is when they're suddenly buying a lot of inventory. When their inventory levels are going really high up there and I'm not seeing it on the sales side. I'm seeing the inventory grow faster than their sales. It's just like mind blowing. I can see it happening where we're going to have cash flow problems and they're going to run into a crisis.
Robin, I'm looking at the answers. That's hilarious. Yeah. A couple of people put in themselves, the owner. Absolutely. Right. That's a disaster waiting to happen unless they're a bookkeeper. Then if they are, then why are we? Yeah. So we get the cheapest option. Yep. All of those are accurate and good. So those are warning signs that if you know that's happening, you might want to take a little bit closer look at cash. And some of these other warning signs. Okay. So not enough cash, too much debt. Now, you don't have to do any kind of deep dive into this. There's generally, like, for example, they should have a month's cash on hand to cover expenses. Well, how much that is, it depends on the company. But you've got an idea that if they've got $3,000 in the bank and $6,000 due for a payroll in 2 weeks, that's a problem. Nobody has to go to school to figure that one out. And so they might not be talking to you about this, but if you look for some of those things, and then when you're looking at debt, how much debt is too much? Well, it's interesting because you really can't see debt payments on the balance sheet and P&L because it's a split between the two, right? That might have low interest payments, but really high principal. You just don't know. But when you start seeing multiple credit cards with high balances, or you start seeing what's called an MCA loan. It's hard to tell from a balance sheet what they are, but just look for the number of loans they've got, loans slash credit cards. If they've got more than two or three, that is an indicator that they could be having a problem. Robin, you've done this more than I have because you do deal with more volume than I do.
Right.
How long would it take to just, if you're not spotting this right away, to go back and take a look for these?
You know what? It takes less than 5 minutes because when we're already looking at their financials and we're proving everything, we're already looking at it. We already see it. Sometimes we didn't know, like for myself, I didn't know always how to fix it, but I could see it. I could tell when things didn't look right. I could tell when there was a sudden shift in their business because I'm not looking at anything other than the numbers to tell me the story. I wasn't looking at anything. There wasn't an emotional connection for me like a business owner. But it takes less than 5 minutes. And that 5 minutes really is enough that could save a business. It could grow your integrity as a firm because now you are going to be able to give your clients who think that you are giving them that advice already. They think of you more as a trusted advisor than just their accountant that's just doing the tax returns or whatever returns that are mandated. They think they think you have their back all the time. And you see it, you know it. It's taking less than 5 minutes to stop and look at this.
So let me ask a question to the folks who are online. And if you're not watching this live, still answer this to yourself. If you're online, put it in the chat. Are you seeing these problems already? Is this something you automatically see? Is it all of them, some of them, or you never thought about this before? Just give us some feedback. And then um, if you could do that while we're talking about, Robin, you've identified a problem. Now what? What do you do?
That was where I always got stuck. Okay, so I've identified it. As an accountant, I was very black and white. I'm going to go back to the inventory one. Oh, you're buying too much inventory. Just stop. That is not necessarily the right answer to every business. After using there's over 230 different cash flow strategies that Cash is Clear has been able to help me identify with my clients. It's taken that black and white and really changed my mindset into stop trying to give my clients the answers and start asking questions. Why are you doing that? What benefit? What are you trying to do? Because sometimes the answer isn't just stop buying the inventory. Sometimes it was, I'm shifting I'm going from being a clothing business to more of a candle business. It doesn't have to always be something so straightforward. It was a huge
Well,
mindset.
it is. And I think part of the challenge that people have is, how do I go from being an accountant only or a bookkeeper only, which is not a small thing, to the expanded role of an advisor in the eyes of my client. And we actually brought in a specialist one day, and her name is Deborah Angeletta. She is a sales trainer. That's what she specializes in. And everybody in this particular mastermind had the same question. How do I transition? Right? I've got this great list of clients. I know they've got problems. And she came up with the magic invite. And I'll tell you what, I'm going to copy and paste this into the chat, but I'll tell you what it is. So I'm copying and pasting. There you go. So it's, hi, Robin. Um, I've noticed that there's an ongoing problem of inventory creep in the clothing industry. I'm just making things up, fill in the blanks. What's the ongoing problem? What's the industry your client's in? Would you please send me a few times that we can meet next week? It'll only take about 30 minutes to review. Now, you could modify it to say, listen, Robin, we're sitting here going over your financials. We don't have time for it now, but I've noticed that this problem is having this inventory is creeping up. We don't have time to talk about it now. I've seen this before. Can we schedule 30 minutes to talk about it next week? It's simple, it's fast, she gets great results, and it's in the chat. Robin, let me ask you a question. So the difference now with the conversations you have with your clients versus before you really had an idea of how to work with advisory. Can you give us an idea of how that is?
You know what? Before, I could see the problems. I could see the low bank balances. I could see the high debt, and I could really see, but I didn't know where the fixes were or how to talk to them. How do you tell somebody that's putting their heart and soul into their business that they're not doing so well? How do you have that conversation? But after, now I've learned to ask those questions and really start to look at where the real problem is. Because the real problem is not necessarily where I always thought it was. It's not necessarily the low bank balance. It's that they forgot that they had so many subscriptions sitting over here, and it's just draining their bank account. There's 230 strategies through Cash is Clear that you could just go right through and help analyze, help ask and find that root cause, because that is a big problem, not just a temporary fix. It is looking for the root cause.
So let me give you guys a little exercise you can do. The goal is for you to walk away from here with concrete ideas of how you can help. So one of them is digging into the issue instead of just giving an answer. Robin talked about that already, and I'm going to give you an example of inventory. I had a client who had too much inventory. It was obvious. He had probably a year's worth of inventory or more sitting in the inventory and that was just on the balance sheet. When we dug into it, it was a big mess. But the standard answer would be, you've got too much inventory, stop buying inventory. But I'm not a standard guy. And so he's like, well, how are we going to fix this? I said, I don't know. We're going to keep talking. We're going to figure it out. And so we literally took a tour of where his inventory was, and I asked a lot of questions. And just here's a few things that happened. So do you have excess inventory that you just can't sell? It's been on the shelves for a year and you haven't been able to move it, right? So that's a key issue for any company. And the answer is yes. If they have too much inventory, generally the answer is yes to that one. Is there inventory that is being turned over constantly that you need to keep buying? What is that? And what's driving the increase, and asking why? And I can tell you, I'm not going to go into the whole story. It would take me 7 minutes. This particular client, the answer was ego. He wanted the little gold dealer sticker for his front door. That's why he had too much inventory. There was all sorts of other excuses, but that's what it came down to. And the real solution was helping him understand that his clients didn't care if he was a gold dealer or not. And then he was able to stop buying so much inventory every year. So, all right.
And that's
So,
the finding of the root cause, because having the inventory wasn't his actual problem. He
yeah.
just needed to have that recognition.
Right, and then he said, "Well, we will get into this a little bit. What else wasn't the root cause? So why did you buy so much inventory?" Well, it's because if I buy that much every year, I get a 2% discount. So I make more money. And so then needing to explain, well, wait a minute, time out. You're spending 24% interest on your credit cards. You're taking out these other horrific loans that don't have any interest, but it's costing you 40, 50, 60 points. You're doubling the money you're paying back over. And so he said, so why does that matter? So why don't you stop? And that it took about 3 or 4 or 5 layers to get to the root cause, which was he wanted the gold sticker, which is, yeah. So, okay. Great point, Robin. So we've only touched the surface. We're already a half an hour into this. Boy, that flew by. Sitting here going, we've probably talked for 10 minutes and we're sort of towards the end of this. Um, Again, if you've got questions, please ask us. But at this point, you get to make a decision. You've just heard some compelling issues about why, in some way, shape, or form, you should be helping your clients identify areas of concern. And then my suggestion would be offer advisory in some way, shape, or form. But we're going to suggest 3 different paths you can go by. Robin, you go first, then I'll go.
You can always develop your own advisory skills, build your own toolkits, expand the services you're offering, take some courses. It's about where you want to go as the next level. As somebody that's been in accounting for 20 plus years, I didn't have the time necessarily to build 100% of my own toolkit for a long time, but because there is a lot, but it was start having those simple conversations, but also expect understanding I know how far I can go, how much time I have to give. So that was my true number one path that I ended up going with at near the end.
Okay. And so that's one path. Figure it out on your own or take some coursework. Number two, don't. And figure out a way to partner with advisory professionals. Now, I can tell you, number one, it's somebody that you need to be able to trust to refer your clients to. Just say, I think you've got a challenge. Can I refer you to somebody who really knows what he or she is doing? Um, Maintain the relationship with with your client. You know, you want to be able to have them succeed and you want to protect your revenue base. So that's one of the reasons you should have a go-to advisor or two. Now, you could work with Robin or I. We both do this for people who say, I don't want to do advisor. I just want to specialize in bookkeeping, accounting, tax, whatever that is. And that's fine. And we have 2 different methodologies. And this is something you might expect from somebody else. One is revenue sharing, where fine, you bring us a client, we share the revenue with you. The other one is they don't necessarily become our client, we contract through you and you bill the client and we bill you. It doesn't really matter. Our primary focus on helping clients, and that's why we do partnering like this. It helps us help more people. Ron, what's the third path?
This is the one that unfortunately I took for a lot of years in my accounting practice before. I did absolutely nothing. I didn't help my clients. I was too paralyzed to be able to actually have those conversations. My client, I thought I could point it out to my clients. Hey, you have a decrease. Thought that was like good enough, but they weren't able to fix the problem themselves. Unfortunately, that also hurt my accounting practice huge before we sold. About 10% of our businesses, our clients who were businesses would go out of business every year. In a 5 year, I was having to replace about 40% of my clients every 5 years. That had a huge impact on my firm, on my practice, because of I was constantly helping or having to find my new clients. And it also affected my reputation because when somebody goes out of business, they have to blame somebody. It's never their own fault that they made the mistake, that they didn't look after their cash flow. It was their accountant's fault. It was their lawyer's fault. It was always somebody else's fault, never their own. I really don't recommend the do nothing and just see where everything plays out. Um, but they
From
are hard conversations.
yeah, from hard experience, recommend not doing anything. You
Yeah.
know, there's some real value of adding advisory skills or partnering. Number one, you add value added services from clients that are not easily replaceable, unfortunately. And I keep reading about this, that it's becoming a commodity to do good accounting, to do good advisory. Somebody said they outsource their accounting overseas or their bookkeeping overseas. Yeah, this is something that's going to be really tough to outsource overseas because it depends on relationships and good communications. So that helps lock in a client. It's not just that they're not going out of business. It's also that it becomes more of a stickier and becomes more of a, even that much more of a trusted advisor. And it's a differentiator between you and other accountants or bookkeepers. And again, you don't have to bring this in house. You can still offer it and figure out a way to make somebody a seamless part of the organization without being an employee. There's good ways to set up good relationships. And of course, you prevent your clients from failing. Most of us care about people, and we don't want to see people fail, nor their businesses fail. And unfortunately, when a business fails, there's a domino effect. The business owner is impacted, but so are families, and high divorce rates, unfortunately, but also the employees and the vendors and the customers even are impacted. Trusted suppliers are hard to find. So there's a whole ecosystem that any given business that you can impact and have a massive benefit to not just your client, but everybody within their ecosystem. And certainly not to mention your bottom line to your company and your personal bottom line and the value of what your company is worth if you, like Robin, end up deciding to sell your company at some point. So with that, let's just do a wrap up, and then Abe, we're going to ask you to come back in to really wrap it up. Start looking for warning signs in your business, in your clients' businesses during this coming tax season / end of year season. And if it's not end of year season and it's because they've got an offset calendar, if you do quarterly reviews, don't wait to the end of the year. Do the quarterly review. Or if it's a month and you're going, what the hell's happening with this client? Get them on the phone. And even if it's not part of their contract, and do them a favor and say, I can see something's going wrong. Do we want to talk about it? Go back and use this phrase. I've seen this before in the industry. Would you like to schedule some time? So that's number one thing. Robin, do you think it would help if they practice answering questions instead of giving quick answers? Was that a hard skill to come by?
That was the hardest thing, not just coming up with a quick solution. It was learning to ask questions and waiting to hear what their actual words were saying.
Great.
What keeps you up at night? They'd most times was, I don't have money. I need more money. Well, the instant answer is, well, sell more. Well, selling more isn't the solution. Raising your prices necessarily isn't the solution.
Okay. Yeah. So practicing. And I read something recently that says if you're doing something, I give presentations a lot, says don't do it in your brain. You've got to do it out loud. And it's like, oh, that's a great idea. So I literally recommend, if you've got some questions you want to ask, then write them out and speak them out loud before you get into a meeting. And that can really help trigger more of an automatic response when you get to the meeting. Okay, so here's another offer. Schedule a call with Robin or I to discuss cash flow advisory services in general, partnershiping opportunities, and training options. Now, Robin is one of my clients, but in certain respect, I'd rather have you call her if you want to about what I do. If you're interested in that at all. But if you want to talk to me, I'd be love to talk to you. Either way, I am putting into the chat, and for any of you who are, listening to this after the fact, Abe will post it, and there's just a couple Calendly invites, one for Robin, one for me, and this is the types of conversations we have. We sort of plan this out, but this is the type of conversation I have with Robin, Robin has with me. And it's just as much of a partnership as anything because I'm invested in making sure she's successful. Again, even if you have zero interest in providing advisory work yourself, figure out some people to refer to, and you'll be doing the world a little bit of a favor. Certainly your clients, but the world will be a better place for it. Okay. Abe, come on back in.
Hey, can you hear me?
Absolutely.
Great. Thank you both so much. This has been really, really informative and awesome. I didn't see a ton of questions come in the chat, although I did have a couple. I thought we
Good.
could maybe just run through quickly to help folks wrap up. The first one, you guys were talking earlier about, finding that root cause, right? And really getting to the bottom of what some of these issues are. But certainly there's got to be situations where the client is just a locked vault, right? Like they don't want to disclose, or it's just too, private or whatever it is. Are there still ways to help these clients? Or is it really like they have to want that help? They have to be open so that you can find that root cause? Or are there ways you can go around it and still do something to, put them in a better position?
Robin, do you want to try this or should I? I'm going to answer. You can go
I'll
first.
go first and you'll probably round it off.
Okay.
The client has to want it to some extent, but it's readjusting your questions so that it's less intimidating, so that it's not as personal. You're not attacking them in any way, shape, or form. It's changing your question so that you're still going to hit the root cause eventually. It just might take a little bit more time.
So I very rarely run into that problem because generally when they come to me, they want help. They know they have a problem. It's unfortunate because it means that they could be weeks or months away from bankruptcy if they don't do something. So they really want the help. Now, that being said, most of the time, people will not describe root causes. They don't understand what they are. They are symptoms. And so that's when you got to keep digging and digging. But I'm very proud of the fact because I grew up saying it's what you know, not who you know. And it's all about the numbers, not about the people. And I went out and I've got this little certificate of life coaching certificate because a light bulb went off in my mind going, this is not about numbers. This is about emotion. This is about fear. This is about helping them break through all sorts of issues that they've got. Otherwise, they would just fix this. That's why I love that example. Ego. You think he was going to tell me that it's and we didn't say at the time, well, it's your ego that's looking for that. But so it's both. And so you've got to figure out a way that's part of this is if you're really going to go deep into advisory, you've got to learn how to talk to people differently, like you're a counselor, because that's what you end up becoming.
Mm-hmm. There's a question that came in the chat box about profit first and their cash flow. I am a strong believer about profit first. Yes, you should pay yourself, but not always is there money to actually pay yourself out of the company. Sometimes you can't. And it is a change of mindset. I'd love to hear more of your thoughts there, David.
Okay, so it's a methodology. There's an actual book, and I don't know if you've ever read it or not, Robin. It's an interesting book, but the premise is you first slash the hell out of costs until you can pay yourself. All right. So that's oversimplifying, but that's basically what it is. It's also adjusting margins, etc. So the answer is it? Hopefully, I'm pronouncing this right. Alika. The answer is I've never used that approach, and here's why. To me, it's oversimplified. It doesn't necessarily get to the root. That's one thing. But the other thing is, it is hard to cut staff, especially at a small company. Now, I've worked for large companies where I've laid off a lot of people, unfortunately, and we needed to do it to survive. That's one thing. But what I find with small companies is that you're cutting bone, you're not cutting fat. And for example, I'm working with a client right now that he keeps being told, fire your salesperson. And it's like, why would you fire the only person who's really bringing money into the company? Yes, it would save a bunch of money. In theory, he could pay himself first, but it's shooting yourself in the foot. I've never found, but do I believe in cutting costs? Absolutely. I had a client who saved $14,000 a month on subscriptions that he was no longer using, and it was a $1 million revenue company. That's 14% of revenue is going out the door. So yes, I believe in it, but it's oversimplified in my opinion, and it's nice. And by the way, that was the client who said, David, I want to implement profit first. And that's how I learned about it. And we never did any of it, but we did a lot of good. Did you have another question, Abe?
So I don't see any others in the chat. I think I had one more wrap-up question that was just kind of going back to the beginning, and if there is kind of a short list of those warning signs, maybe a top 5 that people could keep in mind. What are those top 5 warning signs to be looking out for?
Yes. Robin, do you want to just read them off and I'll paste them into the
Absolutely.
chat?
There was the number one, rapid growth, seeing our clients growing too fast. And that David used the 20%
Oops.
per year. Then there was a significant revenue decrease. The bookkeeper. Who's doing their bookkeeping? Are they accredited or are they not? Are they spending money where they should be spending money for the professionals? Rising inventory levels. Are they buying too much inventory very quickly? Not enough cash and too much debt. How much are they? How many credit cards? How many loans? Are they suddenly increasing their debt per income?
All right. Thanks, Robin. It took me a minute to get going there, copying and pasting. So thank you. But there they are. Signs 1 through 5.
Perfect. And yeah, if we don't have any other questions, we can go ahead and wrap. But David, Robin, thank you so much again for your time and for all the information you provided today. Super helpful. I know everyone who was online will benefit from it. And like to your point, David, folks who watch this after the fact will also benefit. So great stuff. This will be uploaded to YouTube shortly, and you can find it there. And I encourage everyone else who's in attendance to check out the rest of our Prep Your Firm sessions to prepare for the new year. We're still going strong. We have a couple more left before the end of the year. So make sure and look for those. And other than that, just thanks again to both of you and to everyone who joined us. And we're really, really pleased that we can make this happen. So thanks again.
Thank you.
Thank you, Abe.